Good morning, welcome to CurrencyChange Daily Markets Update on Tuesday, 20th of August 2013. US markets are backing up Ben Bernanke's assertion that he has the best inflation record of any Federal Reserve chairman since World War II. Since Ben Bernanke took office in February 2006, inflation as measured by the Personal Consumption Expenditures Price Index has averaged 1.9%. Criticism from Republicans, including House Speaker John Boehner of Ohio, that the Fed's stimulus would spark a rapid acceleration in prices is unfounded. Bonniers show. Traders anticipate prices will rise at 2.1% rate in the next decade, near the Fed's 2% goal. There's a pretty persuasive expectation that inflation rates remain reasonably stable, said Keith Hembrough, chief economist at Nuveen Asset Management in Minneapolis, which manages about $120 billion. Certainly there are a number of critics, but if you just look at the performance of the market and the measure of financial conditions, at least here over the near term, you'd conclude the policies have been successful. How Bernanke's unprecedented monetary stimulus will be perceived by historians ultimately depends on whether the Fed can attain its goal of price stability once the economy gains momentum, said Hembrough. The judgment day hasn't come yet. A critical part of the next Fed chairman's job is making sure that we keep inflation in check. President Barack Obama said at August 9th White House news conference. He also reiterated that Bernanke's successor must continue trying to reduce unemployment, as the challenge is we've still got too many people out of work. Fed officials expect the economy to grow 2.3% to 2.6% this year and 3% to 3.5% in 2014, according to the central tendency estimates of policymakers. June forecasts, which exclude the 3 highest and 3 lowest. Once we get back to the point where the economy is fully employed, there's a lot of fuel there that could potentially stoke a more meaningful risk in inflation, Hembrough said. We don't have the dynamics in place for that to happen here in the near term. In Europe, Merkel vowed to increase spending on infrastructure, education and increasing employment, and said she would not consider forming a grand coalition with her rival in the Social Democratic Party, Piers Steinbrück. She might not need to, as her party leads the polls ahead of elections in September 22nd. 54% of people would vote for Merkel if they could directly elect the Chancellor, while only 23% of Germans would vote for Steinbrück, according to a Forsa poll published last Wednesday. In the UK, the Confederation of British Industry raised its forecast for the UK economic growth this year and next as business and consumer confidence strengthens and credit conditions improve. The business lobby's quarterly forecasts see the economy expanding 1.2% this year and 2.3% in 2014. That's up from 1% and 2% projected in May. The London-based group also said today that unemployment, which the Bank of England has set as the key indicator for its guidance on policy, will fall to 7.6% next year, after staying at its current 7.8% in 2013. The economy has started to gain momentum and confidence is picking up, but it is still early days, said CBI Director John Cridland. We need to see a full-blown rebalancing of our economy with stronger business investment and trade before we can call a sustainable recovery. Services, manufacturing and construction indexes all rose last month, while jobless claims fell twice as much as forecast by economists, suggesting Britain's recovery is gaining momentum. Bank of England Governor Mark Carney said earlier this month that he plans to keep the benchmark interest rate at a record low at least until joblessness falls to 7%. The CBI expects household spending to strengthen in the second half of this year and through 2014, with a stable labour market and slowing inflation helping to shore up incomes. It also said the Bank of England's forward guidance will help boost business and consumer confidence. While the recovery is gathering pace, the economy needs to rebalance through increased business, investment and trade to ensure a sustainable recovery, it said. We hope that will begin to emerge next year as the Eurozone starts growing again, Cridland said. Business investment is forecast to grow 7.3% in 2014 after falling 2.8% in 2013 according to the CBI. The euro area, the UK's biggest trading partner, emerged from a record long recession in the second quarter, expanding for the first time since 2011. Foreign exchange rates for the sterling dollar and sterling euro, 152.30, and for the euro 117.05. Economic agenda. Not really any data out. If you require further information, please visit CurrencyChange.com or contact us. Have a great day.